Today's video, I want to start off kind of with a heavy heart. I've been portraying myself online for the last 10 years as a successful investor who beats the market consistently. And you know what? I just have a confession because I generally tell people I earn 15 to 30% a year. And I finally want to come clean because people have joined my programs and they've made comments about this. They're like, Travis, I've never, seen you earn 15 to 30%. You always earn more. So yes, my confession is, and my business coach tried to work with me through this. He said, stop telling people you earn 15, 30% when you do more. I'm like, well, every time I tell people what I actually earn, they freaking attack me because they just don't believe it. So today I'm just going to be transparent. You know what? I'm going to be completely naked, I guess, for lack of a better word, and log into my account. You'll see the type of returns I have. I'll try to explain why I have these returns. But for those who don't know me, my name is Travis Wilkerson. I am a former U.S. investing champion, but I go by Trader Travis online. And basically I achieved financial freedom at 34 and left corporate America. Then I started teaching people the tools I use to achieve financial freedom in a relatively short period of time, which was about 5 years. If you consider my failures, here's more transparency. If you consider my failures, it was about an 11-year time period because I was an idiot. Like a lot of people, you join programs, you don't follow it, you don't listen to your mentor. And then finally I was like, I'm tired of being stupid, right? I wasn't accomplishing my goals. My account wasn't growing to millions like I wanted it to do. And so finally I was like, let me just humble myself and do exactly what my mentors tell me to do. From that moment to the moment I achieved financial freedom, it was about 5 years, which is what my mentor said it would take. He said it would take about 5 years. So I'm like, if I wasn't an idiot, I would have accomplished it a long time ago. But still, 34, it was a decent time period and or a decent age. And I've been pleasantly and happily unemployed since. And now this is my mission. It's my love project. I give back. And, you get the people like, oh, if it works so well, why would you share it? And I'm like, stop being selfish, right? It's in a quote. I just read it this morning. Out of the abundance of the heart, the mouth speaks. Like evil comes from people with evil hearts. Goodness comes from people with good hearts, right? So when people ask me that, I'm like, geez, they're the type of person that would have something valuable and not share it with other people. But anyway, I'm going off on one of my famous rants, and that goes to show that was one of my admin notes. I actually don't have my notes, my brain. I'm a little scatterbrained. I tend to be a scatterbrained person, so I don't have my notes to keep me organized. But I'm just going to go with it, and I want to pray you gain some value out of it. So let's get to it. All right, so I have lots to share with you. I've run several case studies throughout the year, so we're going to cover my performance for 2021. So you're going to see several things in this video. You're going to see my performance from 2021. I'm going to update you on the public 3X growth strategy case study. I'm going to update you on the market cap options case study because in that program, I'm in the middle of a case study showing people how to grow 5K to 50K. So it's a 10X blueprint, how to 10X your account. That's the same path I use to achieve financial freedom, except I started with 10 grand, grew the account to 100 grand. And from that, we were able to earn enough income to retire. That was pre-kids. Once we had kids, we had to grow the account. But anyway, moving on. The next thing I'm going to do is update you on the U.S. Investing Championship account because I decided to re-enter the U.S. Investing Championship this year. So you're going to see everything here. So let's actually start with the 5K to 50K case study market cap options here because I started back in January 2021 telling people I was going to show everyone how to grow 5K to 50K. That is here. If you're a part of the market cap options program, none of this will be new to you because I publicly document my journey. I always record my trades. I log into my brokerage account so they can see what trades I'm making. You see nothing here because I've already closed out the books for 2021. These were all the trades I made. Winners, losers, they saw everything. It's a lot of trades. If you're part of the program, we've already covered this. I'm just going to scroll down here to the end. So I was able to grow 5K, $5,000 into 15,000. So that was the balance at the end of 2021. And again, my goal is to take 5K to 50K. How long it will take, I don't know. But in 1 year, I was able to triple that account, 5K to 50K. So it's 205% overall growth. 21% came from option trades. The other 184% came from something we call God contributions, which, if you're part of the program, you're familiar with that. That was the secret weapon my mentor taught me, is in why I was able to achieve financial freedom in 5 years. I was just purely trying to do it through get-rich-quick schemes. And he was like, no, you have to combine prudent investing with, he didn't call it God contributions. I forgot what they call it. But when you combine those two, it's a powerful combination, and you can really accelerate the growth of an account. So that was just purely short-term, buying calls, things like that. Also, last year in the Market Club Options program, I did a bonus case study of the 3X growth strategy. You see the public version, which is a little bit more aggressive, but the conservative version of that template taught in Market Club grew 5K to 25K. So halfway to my 50K on only 1 year. So this was 410% overall account growth. 226% came from actual trade performance. The other 184% came from God contributions. If you think that's impossible, it's not impossible when you consider the market just went on a tear in 2021 and just literally pretty much went up the whole year. We did not have any major correction like we're having now as of this recording. I'm recording this in January of 2022, and we're in the middle of a 10% correction. That did not happen last year. The market just went up. So it was a lot easier to make money last year. So, the fact that I grew 5K to 25K or 5K to 15K doesn't surprise me. And again, I'm just showing the Excel now. I'll show you actual broker snapshots here in a second, but that's the performance for those two case studies. That's the performance for 2021 for the Market Club Options program. Now, since we're talking about the 3X growth strategy, I showed you the Market Club Options version. And for those who've been watching my YouTube videos, I am doing a public version, right? Public case study. And I've walked through this. You can go back and review those videos. I've already walked through this document. But now I'm at my 6-month check-in. And I wanted to let you know the market is in a 10% correction. And per the rules that I follow, again, Market Club Options here, we have the red monthly. I went and exited all of my positions. So the stock at the time I exited my positions was at 439. And so from the high, when I started this in July of 2021, SPY, the stock or ETF, was at 441. Right? And it was at 439 the day I exited, the closing price of the day I exited my trades. So the actual ETF SPY had about a 0.2% loss from the start price. What about my trades, right? I got caught in a 10% correction. What about my trades? And that's where I will pull up here in the Excel because you can see it better. Here, you notice I had $4,000 and I put that in Excel so that way you can see kind of starting balance and where I'm at. So I started with $4,000. I'm attempting to take $2,000, about 16 grand in a year. Not working out so far. But anyway, we can see here I invested half of that. Now you understand, and I was waiting to share the secret to why I invested half, because the market just went straight up in 2021. I was like, it made me nervous. I'm like, a correction has got to come sometime soon. It just took a while. But anyway, I invested half. The market did go up and I almost doubled my money in about 4 months. I reinvested everything. I compounded everything. And then I exited here on the red monthly trade triangle. So I'll put that here, exited on the red monthly. All right. Same thing. And I decided after I started that, I was like, you know what? Sometimes the smaller numbers don't excite people. Even though I was like, they don't recognize the percent returns are outrageous. Doubling your money in 4 months? Come on. Buy and hold doesn't do that, right? But I was like, all right, let me show a bigger amount. And so people can see the possibilities if they have a bigger amount to play around with and are willing to lose. So I started with 20 grand, same thing, invested half of it, 10 grand, doubled my money, just like the other one, reinvested it, closed both of them out here on the red monthly. And here's where it's at. So I got caught in a 10% correction, lost money on my positions, probably about a 50% loss on those positions, but I am still at 3508. So it's a 12% decline from the starting amount. So I'm still in a solid position to start back over. Same thing with the bigger amount. Now, this is the secret I discovered after failing at options, right? I used to gamble with options, bet my entire account on trades. I lose everything, and then you have to refund the account. And so what I've learned is the secret to success with options is to risk less money, right? That's the summary there. Risk less money. They're already leveraged. You don't need to bet your entire account. You can bet a small amount of your account and still get market-beating returns. But if you're conservative and you get caught in a correction like I did, you don't lose everything, right? I only lost maybe $500 on this $4,000, but I'm in a good position to start back over. Do I like starting back over? No, but I am incredibly grateful. So that's where I'm at for the public case study. I exited my positions per the Market Club red monthly trade triangle, and I lost a little bit of money. And so guess what? When the market sorts itself back out, I will start this right back over and show you that another secret to option success is you cannot give up, right? Most people would be discouraged by this. They're like, oh, this doesn't work, and they would quit. That's why they never succeed. I discovered that, wow, if I just learn from my failures, and then along the way, I learned to be conservative because I got tired of losing money. So when I combine those two, the persistence, being prudent with my money, discipline, patience, right? Those things you work through over time. I finally found success as a trader. And I hope you see that in my performances. All right, so let's move on here. So now we're going to talk about Success Academy. It was a high-end coaching program I had, about a $3,000 program or $3,000 to $5,000, depending on which option you picked, where I teach every strategy I use. It's option buying and selling. And I'll touch on the option buying and selling here in a moment. Actually, it's option buying, selling, and buy and hold, but we'll cover that lesson here in a second. So this is just another 5K to 50K case study. So I'm actually in the process of doing 3 5K to 50K case studies using one particular blueprint or one particular strategy. So I just showed you the market cap options. That's one 5K to 50K case study. The second one is the 3X growth strategy. The third one is I was teaching it in the Success Academy, and it's called the cash flow case study. It's selling what they call vertical credit spreads or put credit spreads. It's using one simple strategy, showing people how to take 5K to 50K. So that particular case study wound up growing 5K to 15,000 or rounding up 16,000. So you can see the performance is rather consistent there. And it's super conservative, right? At most throughout the year, 10% of my account was at risk. So I kept 90% of my account in cash, only invested at most 10% of the time, and I was still able to grow 5K to 16K, right? 209% overall growth, 35% of it came from option trades. That's trading performance. So I beat the market with trading performance. And again, I'm showing God contributions as well. So those are 3 case studies I showed you. Now let me show you what most people are used to seeing when I record my YouTube videos. This is my case study account. It's a Roth IRA. I picked this strategically because I make too much to add to the account. So I wanted an account I couldn't lose money in. And the reason that's important is because a lot of people are more aggressive with accounts they can add money to. So they'll lose money and then just add money back to it. Well, I can't do that here. So I have to make this work, because if I lose it, I can't add any more money. Well, technically I can. It's called a backdoor Roth, but I don't use that. It's just too much of a hassle for me. But I can't directly contribute to this Roth anymore because I make too much. So you see market cap options trades. These are the trades most people are used to seeing in my YouTube videos or the market cap options program. I log into my account all the time, show you the performance of my accounts, if they're making money or losing money. Again, the market just pretty much went all straight up last year. So these were making money at the time I recorded this. Here's a 3X growth strategy. I already showed you that, right? Here's a cash flow. So the trades you just saw in Excel, guess what? You see the exact same trades here in my broker account. And then down here I have unallocated, which is just like trades me and my sons might place together and things like that. So this is the case study account. Here's what the case study account looks like right now. There's no market cap options. I'm in all cash. No 3X growth strategy. I just showed you I'm in all cash with that, red monthly. Cash flow, I'm still in those trades because there's nothing for me to do. I'm not placing anymore because of the red monthly, but I don't have to close these for a loss. I just allow these to sit. And then down here, you finally see my unallocated. These are my kids' trades and things like that. So sometimes the kids trades and unallocated helps the performance of my account. And that's why I want to show you this. So this is the same Roth you just saw, same ending account values. Here's the performance from January 2021 to 12/2021. Remember, this is a case study account. You just saw my performance for the case study account. 18,000, it grew to about 50,000 or 53,000 towards the end of the year. So more than double. And that's what I meant when I was joking when I started this video. I tell people I earn 15 to 30%, but my accounts usually earn more than that. They don't always double, but I just explain why they doubled. So more than doubled this account. And if you think that's unusual, let me show you another account. This is my SEP IRA account. In December of 2021, right, that was at 90%. So you saw my Roth almost double. This account almost doubled too. This is just a bigger account. And I snapshotted this because I actually moved this account over to TD Ameritrade so I can kind of consolidate and manage everything. But if you're Market Cap Options or even Success Academy, you've probably already seen this. Again, I tell people publicly for years I've earned 15 to 30%, but when people join, I leave that as an Easter egg. They actually see me do a lot better than 15 to 30%. But I always like that to be a pleasant surprise for them, what's possible with options. So now we move to 2 more Success Academy case studies, but these were not shared publicly ever. It was part of my one-on-one coaching program where I was showing people, how to manage 6 and 7 figure accounts. What blueprints would I use for a 6 or 7 figure account? I talked about option buying and selling before. So this blueprint, when you're managing 6 or 7 figure accounts, you can combine buy and hold, option buying, and option selling. When you do that, I'm not saying you, but I was able to grow this account by 65%. So I started with 60,000. It grew to 98,000. So it's a 65% growth. There is no God contribution. There is no personal contributions because when you have 6, 7 figure account, adding money to it doesn't make a significant difference. At that point, you have to, what they say, eat what you kill, right? You have to learn how to live off your account. So you have to have enough growth to handle pulling money from the account. And then down here, as I teach all of my members, you always want to make sure you're keeping pace with buy and hold, right? If you're going to do all this work trading options and you don't beat a buy and hold return, just give up. Just put your money in buy and hold and forget about it, right? Or either keep trying, but at least put your money in buy and hold while you paper trade and practice options. But you always want to compare your performance to like the S&P 500 to make sure you're beating it. So in this time period from the start of the case study to where I ended, SPY had 27% growth, but I had 65% growth by combining the best of all those strategies. Now I'll stop here and just do a quick interjection here. I just recently got a comment I was reviewing someone's YouTube channel, and during this correction, they were making comments about, this is a guy who pretty much just sells options, right? Option sellers are like some of the biggest bigots I've ever seen, right? They always poo-poo on option buying and they're like, option selling is the best thing in the world. It's like, I get it because I used to be a bigot too, but option buying bigot, right? I used to poo-poo on option selling. And so every time I see that, I shake my head. I'm like, man, you all are missing the boat. So Ray Dalio, credit to him. I don't remember what I watched of his, but something he said challenged me one day about learning from people I disagree with. And so I started taking courses from like buy and hold investors. They would talk about how options are risky, you shouldn't trade options. And it was hard because I was successful at trading options. But I humbled myself and I was like, okay, they're successful at buy and hold. Like there's something they know that I don't know. So I learned from them. And then I took courses from option sellers, right? Same thing. It's like, don't buy options, sell options. But still, I learned their successful blueprints. Then I combined that with what I had already knew about option buying. You combine the best of 3 worlds, right? And so I'm going to show you here now on my screen. So let's say buy and hold earned 27% last year. And most option sellers, pure option sellers, right? They might get about a 15% return every year trading options, which is pretty good, right? But they never think, let me add another strategy. It's because they're such in a box. They're so blinded by their bias, they never learn other strategies. So buy and holds, 27% return, plus 15% selling options, also buy options, right? Let's say I'm unlucky and I only get 15% buying options. What do you see here? 57%. So That's one of my big secrets to my success, and how I get these high returns is I've learned how to integrate the best of every strategy. And when you can combine them, well, when I combine them, I get high returns. I'm not guaranteeing you will be able to do this, but that's what I've been able to do. All right. So this 65% growth is from combining 3 different strategies. Now, another case study I did was something called the put ladder case study. Started with 60 grand as well, but this one is only option buying and option selling. Has no buy and hold. It's just trading options. And what do you notice here? 50% growth. Why is it lower? Because it didn't have the buy and hold performance. And so every strategy I take away, the performance lowers, right? Now, let's go back to one strategy, just option selling, and we're going to come here to the cash flow. What was the performance there from trades? 35%. Maybe I lost you though. Let me come right back here. Put ladder is option buying and selling, 50%. If I take away one of these strategies, I also have to factor in my performance is also most likely going to decrease because I only have one strategy. So 2 strategies, 50%, 1 strategy, 35%. So you're seeing how that works? Every strategy you're able to integrate, you can often increase and bump up your performance, but you have to be conservative. That's the secret. I spent many years integrating, right, and figuring out, like, how do you integrate all these different strategies which has all these different pros and cons in such a way that when the market has a 10% correction, it doesn't take your entire account with it, right? That the most you can lose is like 10 to 15%. And so that's what I walk members through when they have the bigger portfolios. It's like, how do we integrate this, but in a conservative way? And of course, when you have a smaller account, you're starting with 5 grand. That's why I do the 5K to 50K case study. I'm like, just focus on one strategy, master that, grow your account to like 50,000, 100,000, and then look to integrate other strategies because you have the skill set at that time to manage multiple strategies. Now, we started on such a high note, we're going to end on a low note. And I'm going to show you, to be transparent, my U.S. Investing Championship account this year. Here it is. It is like lost half of its value in the market decline, which is actually, it's a lot, but it's normal. And here's why. I started off telling you that this was a gamble account. This drawdown, so a 50% drawdown, the market only went down 10%. I lost 50% of the value of my account. That's actually normal for a gambling account. And anybody here who are degenerate gamblers like I used to do, like I used to be, you know that's true, right? The people, this is how you know you're gambling. When the market falls 10%, you lose 50% of your money, you're gambling, right? You're not being conservative, you're not being prudent. And guess what? You degenerate gamblers, I'm talking to you because I used to be this way. Let me ask you a question. You post below, be transparent. I'm being transparent. I used to be a gambler. I used to lose a lot of money, right? So whenever you've lost 50% of your account, what did you do? Did you get desperate and try to get it back by being more aggressive? And let me ask you this. Is there any situation where you got the money back and you also kept it for the long term, right? So I'll say this again. Because you gambled, you lost half of your account value. You're aggressive again. Gambling is being aggressive, essentially, right? Putting yourself in a position to make a lot of money, which the reverse is also true. You can lose a lot. So I'll ask it again. Whenever you were in those situations where you lost half your account value and you're aggressive again, you got it back. You were super excited. You're like, I know I could get it. But did you keep it for the long term? I'm willing to bet no. And that was my experience with gambling. And so what I had to do and how I learned to get the money back is I had to do the opposite what I did to lose it. So I was being aggressive is why I lost the money. In order for me to get the money back, I had to be conservative. And man, that hurts because it takes way longer to get it back being conservative. But you get it back and you tend to keep it for the long term. So that's what I'm doing now. I restructured the portfolio. I'm just going to chip away at the loss a little bit at a time, a few hundred at a time. I estimate the market has to cooperate. If it doesn't cooperate, it'll take me maybe a year and a half to get back to break even, right? Which is fine with me. I don't have any plans on winning the competition right now. If I do, whatever, it's a miracle. But at this point, I'm like, this is my money, right? This account is way bigger than where it started. When I got this account, it was like $7,000. So I grew it to like 38,000, but still, it's real money. And even though it's one of my smallest accounts, I don't think it's smart just to lose money because you're in a competition. So I've restructured it. I'm being conservative. I'm going to chip away at the loss $100 at a time. If the market sorts itself out, starts going back up, then yeah, I might restructure it again to be aggressive. But right now, no, I stopped the bleeding. And so it should stay consistent from about here. But I just want to be transparent because not many people show losing money, right? But if you followed me, like if anybody followed me back in March of 2020, you saw me lose money in my accounts, right? I showed you how much I was down. And the reason I do that is because, one, it's reality. If you're ever going to be a full-time investor, you need to deal with the reality of losing money. But the second reason I show people is that here's how you recover from a loss. So not only did people see my portfolio down in the bear market in March 2020, they saw what trades I was making to restructure and realign the portfolio so that I got back all the money I lost within the next year. As a matter of fact, I think 7 months later, my account had regained what I lost and was way higher. And so that's the other reason I show losses, because losses are not final, right? Well, as long as you stop being stupid. But if you restructure it and you're conservative, you can get the money back. So that is all I have for you. I hope you found a few nuggets of wisdom here. I hope you're not too jaded by my performance. It is uncommon. I wouldn't expect you to have that type of performance. Doubling your account in a year is likely, it's one of those things. It's possible, but not likely to happen. The reason I say 15 to 30%, what I usually earn is because that's over the long span. That's what it tends to average out at. Yeah, you saw me earn like 60% last year. I don't earn 60% every year, but I earned 60% frequent enough. But then there are times like now, when the market corrects, I lose a little bit too much money. And so the average it does over like a 10-year period, it will average out to about 15, 30%. But for the years you double your account, you have 60%. As long as you don't let it get to your head and you start thinking like you're the smartest investor in the world, you can keep the money in the long term and do okay. So again, long-term average, yes, I average about 15 to 30% returns. But as you can see, when the market cooperates, I can often double my account. So that is all I have for you. You take care. Hope you found at least one nugget of wisdom in this video. And I will see you in the next case study episode. And comment below anything you learned from this video. And if you enjoyed this video, be sure to like it. And if you're not a subscriber, subscribe to the channel. Take care. Talk to you soon. Bye-bye.